The stock was down 3.2%. What do you think the news is that investors are processing?
Well, I believe investors are looking at what the first quarter might hold for Tesla when they report their sales in early April, their deliveries. And specifically, my channel checks indicate that first quarter will be a total disaster. Inside EVs estimates that Model 3 sales are down over 2/3 in just the U.S. Consensus for the first quarter is about 58,000 Model 3s and 300,000 for the year. One thing I would ask any Tesla bull is, how much of a miss would it take for you to change your view?
Gene?
I'd love to answer that. I think a miss of 20%, 30%, it would take a huge miss, and the reason is this, is to actually believe in the Tesla story, you need to look beyond the noise quarter to quarter. Now, that may seem like a convenient escape route for someone who's been bullish and the company continues to struggle in the near term, but I think that's the right way to look at this, to look too closely at the near-term numbers, and I want to just point out a couple very simple data points. Last year in the U.S., 2% of cars were sold were electric. Tesla had 80% market share. The future of the auto undoubtedly is electrification, and so Tesla has a lead there. Their batteries are 92%. This is internal Loup Ventures work that we've done about battery densities, lives. 92% more efficient than all the other major automotive companies that have come out. That is a major competitive advantage to be able to build cars that are more profitable. Now, the scaling question plays out. So the simple answer is this. It would take a massive miss because it's not about this quarter. It's about this undeniable curve.
Gene, nonetheless, the price cut to 35,000, do you think that was made from a position of strength or a position of need and dare I say it, desperation? And what does it mean for profitability in the year ahead?
So I think it was from a point of strength, and the reason is that ultimately, yes, they're going to take in a little bit of pre-order money, but cash is not the same critical question that was about the story a year ago. If you go and recall that a year ago, the bears were saying that this $945 million debt payment that they made on Friday was going to be the straw that broke Tesla's back. And ultimately, they still have, call it $600 million in wiggle room. So it's not from a point of trying to garner up extra cash. I think what is necessary, why they need to get that in the market, that $35,000 vehicle, is that people do buy cars and with long lead times. And I think it's important. The same reason why they need to come out with the Model Y well ahead of when it's going to be available at scale.
Gabe, Gene's point about the long-term growth in electric vehicles and Tesla's comparative advantage, particularly when it comes to battery technology, do you disagree with that?
Absolutely, and you'll see Audi unveil 6 new models tomorrow. Tesla, I believe, will show a cash problem when they report Q1 because you take 3.7 in cash, less the convert payment, less a sizable cash burn in Q1, and I believe they will be once again under $2 billion in cash, burning billions this year with over $9 billion in net debt.
Gene, I think your math is incorrect. The math, can we just go over the math quickly?
Yeah, go ahead.
The math that we have is that the cash burn in the March quarter, yes, we don't know. They didn't give specifics around that. I suspect that given the trajectory of the business, it will not be a quote, massive cash burn. There is this piece, and this is about the near term. If you do, for those who want to focus on the cash piece, is that they're going to be taking pre-orders of Model Y. Model Y effectively doubles Tesla's addressable market. So if you assume a similar uptake of Model Y reservations at $2,500, you could look at about $1 billion. And this is not the reason why to be optimistic about the Tesla story. But one factor that people who are more skeptical need to factor in is how they can take some of these pre-order numbers in.
Yeah, I mean, and Gabe, it really feels like that the pattern has been broken a little bit. Musk used to be this hype machine teasing like we got today. You know, the Model Y is coming and the stock would go up and investors would get excited about what Gene just outlined. But it feels like now there's some real questions about demand.
Well, it's a wonder why investors or why any customers would go and put down a deposit for the Model Y. Let's look at the last 2 major product announcements that Tesla made. A year and a half ago, fall 2017, the Tesla semi-truck, which I told everyone on CNBC was fake news and wasn't up to the specs, Well, that was supposed to be delivered by now. We haven't heard anything about that. And then finally, the Super Roadster, same time, fall 2017, supposed to be on the road by now. And guess what? At the Basel Auto Show just a few months ago, all Tesla had was a design shell. So fool me twice, it's hard for me to see why consumers will be fooled a third time.
Gene, final word?
Final word, I would not want to bet against EV, and Tesla's a leader in EV.